I believe we have with us Bala as well now joining in. Thank you so much for taking time out. At a time like this, we are seeing that panic selling really grip the markets. We're in bear market territory quite significantly. What is it that you are advising investors to do at a time like this?
Yeah, I think clearly today's fall in the market is one on account of yesterday's fall in the Kuwait and the UAE market, and also the oil price crack. And the Dow future is reacting purely related to the oil price crack. I think the oil price coming to about $30, and assuming a scenario stays like this for between $30 to $40, it can immensely benefit India, and India being one of the heavy dependent on oil price, oil as a commodity. Therefore, it can benefit India, and today's fall is actually quite sharp, of course, quite obvious on the back of the reason which I just mentioned earlier. From investors' point of view, we normally advocate investors to look at SIP way of investing. While that continues to remain, investors at this point of time can consider reasonably big time to look at the even lump sum investment at this point of time. And having said that, of course, one should also keep in mind the oil price drop, while it can benefit India, can also have the potential of taking the global economy to some bit of recession, and therefore we may probably see a low interest rate regime prevailing, and central bankers actually looking at more favorably to cut rates further and also provide liquidity more into the system. And India as a country have already been doing all these things quite continuously for the last 3-4 months. Assuming scenario, the government is able to actually now quickly react and get back on the drivers of growth, especially related to the auto sectors, the revival in the form of coming with scrapping policy. All such things can come at this point of time, as the government has been quite conscious about this for quite some time. Therefore, it can potentially turn out to be a winning situation for India, and given the fact that oil is being the bigger dynamic driver for from India point of view.
Okay, just want to understand from you, Bala, it's a bit of a divided opinion when it comes to whether or not one should deploy money into the markets right now, because the variables seem ever so uncertain, and day after day we're seeing this panic selling hit the markets. Do you believe that right now is the time to buy into the markets, or would you wait for some amount of stability, some amount of clarity to kick in before actually deploying money?
Of course, if you look at the way I think the market price have fallen today, it's quite sharp. When you look at some of the individual names, pretty sharp, which is nothing but just one-time sell-off that's come from investors, from overseas investors, I would assume, and also some bit of investment selling would have come from domestic as well. But such a sharp fall I've always seen historically does not sustain for too long, and also today's fall has come on the back of series of fall which has happened in the market for the last 2-3 weeks. Therefore, keeping this in mind, I would assume if somebody has got 100 rupees to invest, at least 30 to 40 rupees should be considered as a form of the lump sum investment, with the assumption that market is not going to go back to its bullish territory too fast, and therefore one will get an opportunity to invest even gradually as we move forward. But having since a sharp fall, maybe it could be good time to consider investing.
Vikas Khimani as well joining in. And Vikas, there's nothing but carnage playing out on the screens. I'm looking at the mid and the small cap indices, and that's a whopping 6% gash. Ditto for the frontliners. And, you know, what's unnerving is that at a time like this, it seems that it's not just equities, some of the other asset classes too are being taken down in this rout, barring, of course, gold. Is it a time to take, you know, a bet and plunge into the equity markets, pick up some of the, you know, the lucrative large cap names, or are you advising investors to just remain a bit cautious as of now?
So I think this is again, you know, aftermath of you know, as market is understanding the second or third order impact of the coronavirus, and I think the fear is gripping the market right now. So today's fall across the globe and across most asset classes is, I think, also further accentuating the sense of fear. And you know, my sense is that currently markets don't know how long the coronavirus issue would last. But I believe that, as far as Indian markets are concerned, I believe that, we have given away a large part of our gain in the recent past. We are almost back to 2018 levels. And definitely, it offers, great opportunities in many sort of sectors and segments, and companies. Some great companies have come at a lower price, and largely driven by the sense of fear and panic in the market. So, I do believe that, this is a good time for sort of stock picking. Having said that, one must keep in mind that you should not assume that, the recovery could be immediately very fast and, you're going to go back to resume your, I think it will take time. But once the sense of fear and panic settles down, India, I think we should do well. It's just that the timing of that is still unknown and unclear, and that's kind of spooking everybody.
Right, indeed. And we just have Prashant Jain as well saying that some of the earlier crises have proved as a good time to invest into the Indian markets. Bala, I'm just going to come to you as to where exactly it is you're finding that opportunity. Would it be with some of the beaten down consumption names? Are you finding comfort within staples, some of the financials, or even energy stocks?
I think it's come from the last what you just mentioned about. I think the oil price being at $30 definitely opens up new opportunities to look at energy as a sectors such as OMCs, even such as the input cost being is coming from the oil can also get that benefit. And having said that, the overall big market itself is falling. I would assume, though all of us have been advocating that finding opportunity in the mid and small cap space could be a way to invest. I think having seen the bigger fall in the broad market, Nifty itself is going up about 5.5-6%. It provides an opportunity within the large cap space itself. And at the same time, consumer durables has got, of course, secular long-term story. It doesn't get impacted. Financial services will go ups and downs, given the fact that you'll have the mix of credit growth not coming on one side, other side interest rates are falling, and the demand for money is not there. And you'll probably see, thanks to the commodity prices being weak, we will see some new sectors coming under the credit watch. So keeping all those in mind, I think financial service sectors, one will see a mix of reaction, and there will be some underperformance and some stocks will outperform. So one has to be a little careful in that picking. But I think the best way to play from the investor's point of view, go for the large cap fund at this point of time.
Vikas, are you worried to a certain extent about the ripple effect of this crash in crude oil prices that we're seeing, that in turn could send down spiraling some of the other commodities, or do you believe that India's import bill stands to benefit on the back of lower crude oil prices?
So no doubt, I think India tends to benefit in form of the lower crude oil price. But I think all we need to keep in mind is the second and third order effect of whenever such sharp fall happens in any asset class. I mean, it has repercussions in terms of, it's second and third order effect, and one does not, it really depends on how long it lasts. So let us say tomorrow if we were to get a news from China that coronavirus is settling down, activities are coming back, we will see a sharp recovery in the market and sharp recovery in all the asset classes and all. So it really depends on the extent, how quickly you get the news of normalcy. But having said that, if you continue like this, you will see, commodities sort of remaining under watch list. And if it sustains for long, then it can definitely have a ripple effect in terms of banking sector. I mean, across the globe. I'm not talking about India. And it can have a second and third order impact across the globe and across various asset classes. And that, I think, can lead to some global slowdown. So it really depends on how long this situation will last. My sense is that, or based on whatever little news flows we hear, which cannot be said for sure, that things seems to be settling down and coming back in China, except, probably one epicenter, Wuhan. I think everywhere else seems to be coming back. But again, we need to see a wider news flow to see the comfort of markets coming back. So it's a critical situation. But I would say if you just take the fear part out right now, there are lots of value opportunities which have emerged. Stocks, which fundamentals continues to remain, let us say, banking, financial services, non-credit-based assets, which has not had any kind of deterioration in fundamentals and looks good from long-term perspective. They are available. Many of them are available at 30-40% cheaper price than what they were 2 weeks ago. Now, value has not gone in that. Business models are still same. Management teams are still same. So if somebody can keep the fear aside and say, I can overlook what happens over the next one month, they are great buys at this point in time. So like this, there are various pockets one can kind of look to invest.
Right. Bala, at a time when we've seen the global markets, including India, down over 10% from the recent peaks, and of course, given the fact that there are talks of this bear market phase, given that there are no clear signs of containment of the virus, do you believe that there are fears now of a global recession as well looming large?
Yeah, I think it definitely. I think it looks like what is being talked about, the global recession would set in. The last 4 or 5 years, it never came. I think the coronavirus seems to be leading us into that segment. Definitely, the last 3-4 months, 1 month of inactivities across different sectors, and now the quarantine has now become the norm everywhere in most of the countries. It has impacted the tourism traffic, airline traffic, hotel occupations, and then the general consumption slowdown that I think happened in the global market. And also the interest rates in the US is going as low as about 0.5%, and oil price being at $30 in all probability, if it stays like this, US shale gas, whose cost of production is high, may also have its own difficulty in maintaining the oil output. Therefore, it can lead to some bit of slowdown in even the global economic growth. It will have some bit of impact on global recession setting in. But having said, of course, that I think what remains abundant in supply is actually liquidity. The interest rates remain low because central bankers will be more active in terms of cutting rates and also providing liquidity. And that's the thing. I think India probably, the beneficiary of oil price being weak, maybe we will be able to actually come out by taking few steps. We can probably stand a little different compared to the global economy. While the global economy will go through some pain points as a result of that. And the last point, which of course is to be tested, the oil price drop will have a cascading impact on the credit market, and we'll probably see the credit default spreads moving up. We're already seeing that happening. And maybe if that continues to rise in the global space, I think what we have seen in the India for the last 2 years of credit-related issues, we will probably see a similar situations emerging in the developed market.
Okay, fair enough. And Vikas, any closing comments for you when right now the market mood index on our screen is reflecting nothing but extreme fear?
It is, and I think, as I said, that I think it will also settle down. Large part of the damage is done. I think, if at all a little bit more left, if it is, but I do believe that large part of damage is done. And right now, rather than focusing on the, where it has gone down, I guess one focuses on now looking at the pockets of values from a recovery perspective. I think one can be one can do well. But I think keeping fear aside is right now, or panic aside is right now is the key thing.
Gentlemen, many thanks for joining in and sharing with us your thoughts and advice on how one should navigate the big sell-off. Naresh Mirani as well as Dr. C.K. Narayan now joining in on the chart.